The United Kingdom is one of the world's leading economic powers, and its economy is showing signs of resilience despite the global economic downturn and the uncertainty surrounding Brexit. Brexit, the word that has been controversially trending on the internet for the past few years. Since the United Kingdom voted to leave the European Union in 2016, Brexit has had a significant impact on the UK's economy and political landscape. Economically, the UK has experienced slower economic growth since the referendum, with GDP growth slowing from 2.4% between 2010 to 2015 to 1.4% between 2016 to 2019. The UK's financial services industry has been particularly hard hit, with many banks and other financial institutions moving away from the UK due to the uncertainty of Brexit. This has had a significant impact on the City of London and other financial centers. Politically, Brexit has resulted in a period of uncertainty and instability. The UK is still in the process of negotiating the terms of its withdrawal from the EU, and this has caused a degree of political turmoil. The UK's relationship with its European neighbors has also been strained. The UK and the EU are now negotiating a new trade agreement, and there is still a great deal of uncertainty surrounding the future of the relationship between the two sides. Overall, Brexit has had a major impact on the UK both economically and politically. The full impact of Brexit is still to be seen, but it is clear that it has caused a significant degree of disruption and uncertainty. Despite the political and economic tumult caused by Britain's departure from the European Union, the economy has bounced back to pre-referendum levels. The UK's economy is resilient because it has a diversified economic base. It is not dependent on any single sector, such as manufacturing or financial services. This diversified base of industries has allowed the economy to adjust to the changes brought about by Brexit. The UK is a major trading nation, and its economic growth has been fueled by exports and inward investment. The nation's exports are highly diversified across a broad range of sectors, from aerospace and automotive to financial services and tourism, and this diversity insulates the UK from the shocks of any one sector. Another great thing about the UK is that it's one of the most sophisticated and innovative economies in the world. Its education system nurtures talent and produces highly skilled workers, while its universities are world-renowned for their research and development. This helps the UK remain competitive in the global economy, driving innovation and encouraging investment. So the conclusion so far is that United Kingdom's economy isn't going to collapse. But it has certainly performed worse than European Union's countries. The United Kingdom's economy performed worse than the European Union's economy when it came to recovering from the COVID-19 pandemic. This was due to a number of factors. One of the reasons why the UK's economy was weaker was because of its reliance on the service sector. This sector was hit particularly hard by the pandemic, as lockdowns and other restrictions had a significant impact on businesses. The UK's public health response to COVID-19 was also weaker than in some other European countries, which meant that the virus spread more rapidly in the UK than in the EU. This contributed to a longer period of economic disruption and slower economic recovery. The UK's economic response to COVID-19 was also less generous than in some other countries. This meant that businesses and individuals had less access to financial support, which hampered the recovery process. Finally, the UK's economy was affected by Brexit. The uncertainty surrounding the terms of Brexit has had a negative effect on the economy, as businesses have been reluctant to make long-term investment decisions. Thanks for watching.